Hi, I'm Todd Rosenbluth, head of ETF and mutual fund research at CFRA. I'm joined by Aniket Ullal, who heads up our data and analytics of ETF data at CFRA. It's a record year that we had in 2020. Really amazing what we had. We crossed the $5 trillion ETF mark. We're heading closer to $6 trillion. Record year of ETF inflows, a record year for fixed income. And at CFRA, it's been big milestones. We relaunched our ETF rating methodology with new holdings-based analysis and new quantitative metrics. From a First Bridge data perspective, we've expanded data into Canada and are looking outside of North America. Aniket, really great year. What jumps out to you?
Todd, as you said, it's been a very unusual year. As you know, 2020 was a very challenging year for many people. But as far as the stock market goes, and certainly as far as the ETF industry goes, it's been a very exciting year. I think part of it is because there was a lot of fiscal and monetary stimulus that essentially separated stock market performance from some of the pain people were feeling in the broader economy. But as you said, assets have grown tremendously, partly because of stimulus, partly because savings rates went up. And so if you look at 2019 year end versus 2020, the number of ETFs actually haven't grown that much. If I look at the numbers here, there were 2,344 ETFs at the end of 2019. That grew to 2,383. So only a 2% growth in the number of ETFs, partly because we had a lot of closures, which we'll talk about. But the asset growth has been tremendous. It was almost 23%. And as of year end 2020, we had $5.47 trillion in assets in ETFs in the US, listed in the US. That's a very significant growth rate, which is a testament both to the product structure itself. ETFs have obviously continued to be very popular, as well as growth in savings and investments and the stock market in the US.
Yeah, and I think if we go down a slight level at the asset class level, there's some impressive data as well. So I mentioned a record year for fixed income ETFs. Fixed income ETFs had over $200 billion of net inflows. That's about 40% of the overall money that went into overall ETFs. They represent just 20%, give or take, of the overall ETF pie. Commodity ETFs had about over 7% of the overall net inflows. They're about 2%, give or take, of the ETF market. And of course, equity ETFs were impressive. So lots of great trends that are happening at the asset class level, as well as at the sub-asset class level.
Yes, as you said, the flows have been healthy across all asset classes. Fixed income, of course, was a very big year, partly driven, as you said, by the government stepping in and the Fed stepping in and buying ETFs as well. But again, it's been across the board a very, very strong year for ETFs in all asset classes.
Yeah, let me piggyback on that from the fixed income perspective. So fixed income ETFs not only were popular, but it was actually broadly based. So corporate bond ETFs were the most popular of the subcategories that we at CFRA through the First Bridge database calculate, more popular than the broad market US equity products, more popular than the broad market fixed income products. ETFs like LQD, which is the investment grade corporate bond ETF from iShares, VCIT from Vanguard, also very popular. And we also saw interest in high yield. But it was also, we saw municipal bond ETFs, we saw inflation protection based ETFs, a lot of different sub-asset categories that were popular as investors became more comfortable with fixed income ETFs and were willing to be more tactical with their exposure as opposed to just having building blocks for their asset allocation strategies.
That's right. And as you said, it's been interesting to see those trends across asset classes and as well as across sponsors. And I know you've been doing some analysis on seeing how flows have gone into various issuers, Vanguard versus State Street. And frankly, the numbers look quite interesting.
They do. You're right. So Vanguard, who's the second largest of the ETF providers, actually had the most net inflows. About 40% of the net inflows went to Vanguard. That's about double what went into iShares and considerably larger than what went into State Street. That's the number 3 provider. We're also excited to see some of these up and coming ETF providers. So Global X punched above their weight with thematic oriented ETFs. JP Morgan with their low-cost beta builder products and active fixed income. And speaking of active management, ARC ETFs ARKK, ARKG. These products more than doubled in value, and of course the money traced after that performance. So lots of great trends that are happening at the asset class level. I think if we look at where we saw the product development, it was also very exciting in terms of the new entrants into the market and those sub-themes that we saw.
Absolutely. Just adding to your numbers on the sponsor-wise flows, every year when we talk about this, we're always talking about how the big three, Vanguard, BlackRock, and State Street, take the bulk of the flows. But as you mentioned, it's been very interesting to see some of the newer or second tier in terms of size entrants grow, particularly ARK with 21 billion in assets. So that's been very interesting. As far as the new launches go, it was a very, very busy year. We had 313 new ETFs listed in 2020. That's a very large number. We also had a lot of closures, but those 313 were kind of split across 2 or 3 different product categories, which have got a lot of interest. The first one is defined outcome ETFs. These are ETFs that limit the downside to investors investing in that product, but at the same time also cap the upside. We also saw over 50 ETFs in that category. We also saw many launches of active semi-transparent ETFs, 19 of those, as well as a lot of thematic ETF launches. So there were over 50 thematic ETFs that launched in 2020. So between defined outcome, active semi-transparent, and thematics, we saw some very significant introductions in all of these 3 categories. And I'd say these are the 3 dominant product structures or kind of categories that saw the most activity in 2020.
So at the firm level, just to expand on that a little bit, we actually saw a divergence. We tend to look, as you mentioned, the top 3, top 4, top 5. Vanguard and Schwab and State Street to a lesser extent, but they tend to keep their product lineups relatively stable. And we see BlackRock, which runs the iShares business, and Invesco that are where we tend to see more activity. And BlackRock had a significant number of launches in the thematic space. They also offered active ETFs, whereas Invesco was pruning their lineup. They, as the audience probably knows, acquired a couple of businesses. They acquired Guggenheim, and then they acquired Oppenheimer funds in the last 3 years. And so it's inevitable that the product development slows and you try to take some products off the shelf that no longer are popular. We saw net new products for BlackRock, and we saw a reduction of the overall products that Invesco offered. And Innovator, First Trust were some of the firms that were very popular in terms of launching those defined outcome products that you mentioned. So lots of development within the overall ETF space at the firm level, at the category, at the subcategory level for us at CFRA to be taking our pulse of.
Absolutely. And I think looking ahead to 2021, it's going to be another strong year for ETFs. I think there's no question about that as a product structure. Certainly in terms of what happens in the market, there's probably more uncertainty that will affect overall asset growth. Jury's out on that. But certainly as a product structure, I think we can continue to see more ETFs being launched, as well as gathering assets both in the US as well as internationally. The themes that we talked about over the last couple of years will probably continue into 2021. The first being what's going to happen to active ETFs. Certainly the success of ARK, I think, is going to help active ETFs tremendously. Defined outcome, we've seen a lot of launches, like we said, over 50, but will they now gather momentum in terms of assets? And again, thematics, what happens to those? So I think those are all themes that will continue into this year. And it's going to be another interesting year for the industry, for sure.
I definitely think so. And, we at CFRA, we now have ratings, star ratings on about 1,900 ETFs. That continues to expand as new products come to market. We typically cover ETFs relatively quickly. We're covering some of the thematic and the defined outcome and active ETFs that you touched on. And we're excited to continue to cover it using the First Bridge data. I think our industry has a lot of growth ahead of it, and excited for us to build out our coverage globally. I think that's a big trend that we're going to be watching outside of the United States in 2021 for CFRA.
Yeah, absolutely. And as the industry grows and as assets grow, I think there's going to be more interest in ETF data and research, because certainly that's an important component of analyzing what happens in the industry. So I think it's exciting for us to expand our coverage, as you said, our holdings coverage outside the US and outside North America, and excited about working with you on that, Todd.
Thanks, Aniket. I think there's a lot of great insights that we at CFRA are sharing with our clients. They can learn more about this on Market Scope Advisor, if that's how they're viewing this, on CFRAresearch.com or firstbridgedata.com to be able to learn about all the tools and resources that we at CFRA have to offer. Thanks a lot.
Thank you.